What's up, traders? Chris Capri here, SecondSkiesForex.com, where we change the way you think, trade, and perform. We're going to be adding a new video series, a once-a-month video series, doing monthly analysis on the Ichimoku Cloud. We do this for our Ichimoku course members on a more in-depth basis. We cover more instruments, different time frames, and so forth, and we talk about strategies and potential trade ideas. But I wanted to kind of give you a sample of this on how we do this for members. Now, the way we approach Ichimoku is slightly different than a lot of what you'll see out there. A lot of what you see out there is mostly focused on the 5 lines, and that would be the Chiku, the Tenkin, the Kijun, the Senko Span A and B, the Kumo. The thing about it is that this misses a very important aspect of Ichimoku trading. So Ichimoku trading, as if you look at the text and you have translated the text by Goichi Osada and his main predecessor, Hidenobu Sasaki, they spend a lot less time talking about the 5 lines and they spend a little bit more time talking about the 3 pillars, which is Ichimoku time, Ichimoku wave, and Ichimoku price theories. Those had a lot more words and chapters in their books than the 5 lines. So we start off with the 3 pillars particularly, and then we move into the 5 lines. And the way we kind of do our analysis and come up with our trade ideas is that we create the Ichimoku context first. So this is a framework by which we approach any time frame, any instrument, any environment using Ichimoku. And the first thing, one of the first things I'm going to share with you today is that we look at wave structure. Now, if you want to learn more about wave structure or Ichimoku wave theory, I will leave a link below in the description. So I will just run through some descriptions pretty fast on this one here, talking about N waves, which is a very basic wave structure. And I'm mostly going to be talking about wave structure holding or kind of breaking down. Starting back in late December and almost the beginning of the year, the euro dollar was already kind of on a bullish run to end last year, and that has continued through this year, and we can kind of see this in the wave structure. So this is your A, this is your B, this is your C, this is your D point in your N wave structure, and that's held up very well. And if you do this same one here, A, B, C, D, that wave structure is held up. So we had 2 kind of overlapping wave structures that supported each other. You know, they said, hey, this is what the next move is most likely to be, and that manifested. So they played out as expected. But then we've seen a subtle disruption in this most recent wave. So if you take this as a longer I wave all the way up, it would be an A, B, C, and D point, and the D never really closed above the B point here. So that would be kind of a disruption in the wave structure. And generally when you see disruptions in wave structures, you kind of want to be a little bit more on the alert. Things become a little less with trend in that sense. Anytime there's a disruption in wave structure or even the 5-line context, then things become a little less probable. And we're seeing that kind of in Eurodollar. It has a little more hesitation and is kind of stuck in this range between 25 and 22.5. So with the wave structure being kind of disrupted a little bit, what I see most likely happening is kind of a complex, let me go rectangle, complex kind of corrective structure for a little bit. And it's probably going to, bounce around in this area for a little bit, but the overall wave structure hasn't been fully disrupted. So until this kind of C point is disrupted, then the structure will maintain itself, or the bullish bias should maintain itself. When we start to look at the 5-line context, the Chiku span here has yet to pierce the price line. Since we've had this upward TKS above the Kumo, which is a strong cross, the trend has been pretty good. If you had gotten in on this trade here, you would have gotten in a long time ago and be in a lot of profit. When we look at how the price action or the price line related to the Tenkin and the Kijun, it spent a fair amount of time, sometimes holding the Tenkin, but a fair amount of time also breaking it. So what that communicates in terms of level of imbalance between the buyers and sellers is that the buyers are in control, but there is a decent amount of counter trend players in there. High momentum trends generally do not get past the Tenkin that often, and they don't visit the Kijun that often. But this did. This visited twice in literally a month and a half. And so there is a fair amount of counter trend players in the market, but the bullish bias is still intact. We are currently below the Tenkin and the Kijun, so short term that's bearish, but we haven't broken the structure yet. And the Kumo is right here below it. Pullbacks into the Kumo probably are going to run into some sort of support there and buying interest, especially the longer this goes. If the price ends up kind of attacking the Kumo when it's a little bit thicker here, then that's probably going to indicate a fair amount of support and a greater probability that pullbacks will hold and find more buying interest, especially with this flat Kumo bottom here. So right now the market is overall in a bullish phase. I want to be trading long more than short, and there is a slight indication of some weakening momentum, but in the future we have upcoming support through the Kumo there pretty thick and the flat bottom, and we haven't even actually touched the Kumo since late last year, so that is also a bullish sign as well. So probably some pullbacks, probably a little bit of a correction in here, but overall medium term the Ichimoku context on this is bullish. And so that's kind of my monthly analysis on the euro dollar. Okay, so let's take a look at the dollar yen here. So starting with the wave structure at the beginning of the year, we can see that this N wave structure really hasn't been disrupted at all. We've had 3 overlapping N waves that have all continued to unfold in a bearish manner. And so until we see a wave structure disruption, we really don't have much of a context for wanting to get long dollar yen. We want to be shorting most of the time and very, very rarely going long on the dollar yen right now, because this is a high momentum trend. And you can see this reflected in a lot of the price action or price line getting stuck at the Tenkin and not being able to get past it. The Euro trend was able to get to the Kijun a couple times, but this one hasn't even done that. And if you remember anything about the Tenkin is designed to kind of give you an underlying sense of the momentum in the market. So when a bear trend is below the Tenkin consistently, that's very bearish. That means high momentum. And in a bull trend, when we're above the Tenkin consistently, that's very bullish or high momentum. So we haven't even hit the Kijun yet. Still strong factors for bearish momentum on the dollar yen. The Kumo is continually tracking down. It's getting thicker and thicker, suggesting that we might start to see some sort of correction, some sort of bounce, maybe slightly deeper pullbacks before heading lower. But overall, the bias on this from a wave structure and a context is bearish. Now, generally, when you do spend this much time from the Kijun, that does kind of eventually set up for a pullback towards that. It's kind of the reversion to the mean concept that will play itself out. When that happens, the Ichimoku isn't saying it's going to happen yet. It's saying there's not enough signals for that to happen yet to even get to the Kumo. So right now, most of the context is saying Ichimoku is saying it's very bearish right now. We want to be sellers more than buyers on this one. That's kind of my basic analysis, or my monthly Ichimoku analysis for you. I will be doing some again in March, so expect another monthly commentary on this. And we'll also, of course, be doing more videos on trading mindset and neuroscience and price action. If you'd like to learn more about trading the Ichimoku Cloud, understanding the 3 pillars, different wave structures, setups, strategies, how we approach it, check out our Ichimoku course at secondskiesforex.com. We're actually updating that course right now and going to be putting in new lessons, so people who get in for this current price are going to be grandfathered into the new course for free. But just understand, when we do launch that new course in the next few weeks or months, that the price is going to go up and you won't be able to get the lower price. So generally recommend getting in at a lower price point instead of spending more money later on. Feel free to check out our website. We have a ton of free Ichimoku videos, articles, and content there at secondskiesforex.com. Until then, I look forward to hearing from you, and I hope to be working with you soon. Take care, everyone, and good luck trading.